Can anyone hear me now? Testing, testing, 1, 2, 3, testing. Can anyone hear my voice now? Okay, I guess that worked. I dialed in. It seems to be the only option right now. I don't know what's going on. I gotta restart my computer later. Okay, so I would like to welcome everyone to our Monday Game Plan webinar, where we talk about some of the big stories affecting the markets this week. This is a fairly important week in the markets with a U.S. focus. We have the Federal Reserve monetary policy announcements, along with a whole slew of earnings reports from the U.S. and the first look at GDP for Germany along with the U.S. So all of that is typically very market moving and could bring forth some interesting moves in FX, because not only does currencies take the cue from equities and earnings will be the main story, but we also have, of course, FOMC and Powell's guidance. In general, since the last U.S. monetary policy announcement, most of the U.S. economic reports have been softer. If you recall, basically we had U.S. in this month of December report a loss of jobs, and this was the first time we had job losses since April. Weekly jobless claims also spiked in mid-January. Retail sales fell for the third month in a row. So a lot more weakness since the last monetary policy meeting in mid-December. Of course, the whole virus situation in the U.S. has worsened. But, if there's one thing we learned last week is that the vaccine appears to have made policymakers, like many of us, more confident about the medium-term outlook, even though more pain and grief is more likely first. And so that could very well be the outlook that the Federal Reserve adopts. Right now, the U.S. dollar, for the most part, is firm. I wouldn't say it's firm across the board because it's given up a little bit of its gains, but in general, it's kind of firm. And we're going to be looking at a few things. In terms of the FOMC statement, the question is, are they going to have that glass half full outlook that other policymakers have, even though data has been softer? And I think that's probably going to be true. And whether Powell, Jay Powell, is going to address the fact that there's been a lot of talk about the central bank possibly tapering asset purchases sooner rather than later. We've heard a little bit of that from other policymakers. So it would be interesting to see whether Powell kind of weighs in on that. I think that it's a bit premature to even discuss it. They have plenty of opportunities to do so throughout this year, and I think they will. But it is a focus investors are kind of looking into, and they will be watching this week's monetary policy announcement to see if anything really comes out of that. So keep your eyes peeled for that, because the comment on tapering as well as the general outlook on the economy is going to be what drives the movement in currencies. We also have Q4 GDP, which we'll see when we look at the economic calendar. GDP, for the most part, is expected to be weaker than the previous month, but I think there could be some additional softness that not everyone has kind of keyed into. And so, that's definitely something to be cognizant of, because I think the risk is to the downside. There's talk of a double-dip recession in the Eurozone, And the fourth quarter was not necessarily an easy one for the U.S. either. Eurozone obviously went into lockdown a lot sooner, and so they, had more to worry about growth-wise. But I think for the most part, what you do see is that the U.S. wouldn't have fared all that much better either. We also have some other things going on, like we have UK labor market data, but we'll talk about all that later. The main focus is indeed FOMC earnings and Q4 U.S. GDP. So, with that said, let's take a look at the economic calendar. Let's take a look at our heat map first. Taking a look at the heat map, which is kind of what you're looking at right now. So our outlook for the dollar is bearish. I don't think that Powell is really going to say anything overly positive for the greenback. Now, even though it's bearish from a general perspective, there is kind of still scope for it to rally. I think it's a little early to say, and the reason for that and the reason why it's such a tough call is because we have risk aversion. I think that stocks are pulling back, futures are down. I think that we could see a situation where it falls further, and if that's the case, that will be positive for the currency. And so, keep an eye out for that, because it is, there's a lot going on in terms of the dollar this week. I wouldn't say that it's overwhelmingly negative for the currency, but in terms of the GDP report, in terms of Fed, I think that it may end up being a bit more negative than positive. Euro, I'm neutral. This morning's IFO report, contrary to what our position was, turned out to be weaker, which is a bit of a surprise considering that we did have stronger ZOO and PMIs, but that's what the market thinks is going to be the situation for the euro, and the euro is underperforming, and so we're kind of neutral euros right now. I think what's important to realize is that the general outlook in the long term is negative dollars, simply because of more stimulus, fiscal spending, things like that. But risk aversion could weigh the euro down a bit. And, there's a lot going on that, could affect the currency. So, keep an eye out for that, because we are as well. Sterling, I'm bearish for short sterling right now. So, we'll see how that goes. But I'm bearish sterling. They've got an uncomfortably high level of virus cases, which deaths, which no one is obviously happy with. I think everyone's very much concerned, and I think we could be in a situation where we do see a bit more weakness in sterling, because unlike the UK, it seems to be that whatever's happening is catching up to sterling more than it may be for some of the other currencies. So definitely keep an eye out for that. Aussie, I'm neutral. In general, Aussie seems to be doing okay, but it's also a risk. We're short Aussies right now. It's also a risk currency. It's subject to the market's risk appetite. And stocks are down. I think stocks are going to continue to fall. So all of that should lead. And Aussie is very overbought, and I think all of that should lead to a pullback in Aussie, a pullback in CAD, a pullback in Kiwi. There are some ancillary reports from all of these countries, so we'll have to keep an eye out for that. But in terms of there's one piece of significantly market moving data from any country. Not, huge one, but, that's something, we are watching, we're looking forward to. And then Swiss franc and yen, I've been bullish, I continue to remain bullish. I think that, those currencies could very well rally or extend their gains on ongoing pullback in stock. All right, so now let's look at the eco calendar for a bit more of a deep dive. As I mentioned earlier, we had some data released already, and that was the German IFO report. We didn't really have anything yesterday. So German IFO report came in actually surprisingly weak. We had a weaker business climate survey, current conditions, expectations particularly so was lower. So, no one's happy to see that at all. And I think, it's something that is a little bit, worrisome. And I think, that could just be the catalyst that everyone's waiting for a little bit of profit taking in the euro. We do have ECB President Lagarde speaking. I think BOE governor is speaking as well today. And then nothing else on the U.S. calendar. New Zealand has PSI. And the thing here is that we did have significantly weaker manufacturing PMI. So there is a good chance that we could see a further a decline as well in PSI, which obviously would be troublesome for the currency. The next, sorry, I did not mean to click on that. Give me 1 second. The action kind of heats up over the next few days. And the reason why we say that is because we've got UK labor market numbers, and it looks like the PMIs were significantly weaker in the UK, unlike the Eurozone. And because they were significantly weaker in the UK, we could have a situation where the labor market numbers are quite terrible, and that's what we expect, of course, which is why we are also we're also negative, the currency. Nothing much else on Tuesday, but of course we've got a lot of earnings to focus on. We have U.S. Case-Shiller data, not a huge market mover. We also have Australia inflation data. That seems to be, sorry. This is actually on Tuesday. We do have U.S. consumer confidence numbers. And because we had a weaker University of Michigan numbers, the consumer confidence numbers could be softer as well. Then we have Australian inflation data. That's probably going to be better. And the reason is because there were higher inflation expectations. There were higher inflation expectations in the first quarter. So I think, those numbers could be a bit firmer as well. And on Wednesday, we have the GfK German confidence numbers, durable goods orders from the U.S. But of course, the main focus is the FOMC rate decision, and no changes are expected from the Fed. Those of you joining late, I talked about how the main focus is whether the central bank, whether Jay Powell kind of has a glass half full outlook like some of the other central bankers we had last week, and also whether there's any sort of mention of their some sooner or earlier tapering. New Zealand has trade data. That's probably going to be softer, as we are likely to see a very, very good possibility of we see a very, very good possibility of weaker trade data. And then on Thursday, we have Eurozone confidence numbers, sentiment indicators, as well as German CPI. The Eurozone confidence numbers are expected to be softer because, the countries are locked down. And given that the countries are locked down, you will see that there is a very, very good possibility of some deterioration in sentiment. And then we have inflation data from the Eurozone, which will probably end up being softer as well. So definitely keep your eyes peeled for that. And then U.S. GDP, this is the other big focus. Forecasts are low, 4% increase over 33% the previous month, but fourth quarter was a tough one with significantly weaker retail sales, larger trade deficit. Most of the economists' estimates seem to be for a weaker number, and I think that could very much be the case. So keep an eye out for that. We're watching it. That could be a problem for the currency. And then the U.S. has new home sales, which could be better because existing home sales were stronger. On Friday, we have some data down from Japan, but it's not hugely market moving. On Friday, we have German labor data and German GDP numbers. Where are they? German Q4 flash GDP numbers. Double-dip recessions expected for the Eurozone. And, we'll see. This could be the sign of it. And, that could be, actually, no. It would be first negative in fourth quarter and then negative in first quarter of 2021. So this could be the first sign of initial weakness. So that could really, so this is a tough week for the euro. I think, the more that we talk about it, the more reasons there is for more of a euro decline. We also have CAD GDP. We did have stronger data in contrast in Canada. So that could be, better for the currency rather than weaker. But still, the Canadian dollar is falling. So keep an eye out for that. And then last but certainly not least, some U.S. data, personal income, personal spending. All these numbers should be better. Well, actually, no. Income should be better, but spending should be weaker because spending really contracted in December, whereas, people are obviously saving more due to, the virus. And as a result, incomes, could be, and also with unemployment claims, incomes could be lifted somewhat. And then the University of Michigan Consumer Sentiment Index, always one to watch. So, we're going to be watching that and encourage you to do so as well. Okay, so now let's take a look at the eco calendar, the charts. We're short pounds. I think pound is due. This is some overhang on the weekly charts. I think pound is due for a deeper correction. 4-hour charts show that it could pull back to 136.50. We talked about euro already. I think this is really the beginning of what could be some deeper sell-off in euro. So I actually might reposition our Smooth 40 trade for that after this talk. Dollar yen, not too much. It's hanging up. It's finding resistance at the 60-day SMA. Weekly charts have some resistance as well. 4-hour charts look bullish. Dollar up in general due to sell-off in stocks, risk aversion. And I think that can continue. Dollar Swiss also turning upwards. I think we could see further gains in dollar Swiss. Kiwi is the strongest currency today. It still looks very firm. Looks like it could move higher. Although I really wouldn't touch it right now. We're short Aussies. 4-hour daily chart doesn't look that great, but 4-hour charts look that we have a lot of overhang resistance. So I think it could pull back further. And then dollar CAD, it's definitely signs of a bottom here, and we could see a bit more of a rally in dollar CAD. So, a lot going on this week, very big week. We have always said that currencies take their cue from equities. So, pay attention to that because that could very much be something that plays a very big role in risk appetite in general. So, any questions or charts that you may want to look at before I turn it over to Boris? What is the University of Michigan survey? The University of Michigan Consumer Sentiment Index is a sentiment index, and basically talks about, whether or not, investors feel, or the general public feels optimistic or not. And that's pretty important.
It's the most important sentiment survey in America. It's the oldest and the most trusted, so people follow it all the time because it is the most up-to-date survey of consumer behavior. And the idea is that if consumer sentiment is strong, it will translate into strong consumer behavior. It doesn't necessarily always work that way, but that's basically the assumption.
Okay, let me see if there's anything in the question box. If not, I'm actually going to log off because, I've got to fix this audio on my webinar. Dollar index. Yeah, we can look at the dollar index. Dollar index, we're still below a lot of key moving averages. Overall, if you attended our webinar on a 2021 outlook, you will know that I am bearish dollars, and I think that will continue to remain our overall outlook. Okay, looks like there are no other questions, so we can always find me in the chat Kathy room, and I will talk to all of you soon.
Okay. All right. First of all, everybody give me a sound check. Let me know if you hear me okay. I'm going to take my screen. Show my screen. No, it's not the screen I want to show. Show this one. Okay. All right, awesome. Everybody's good? Hey, Cheryl. Hey, Connie. Hey, Miguel. Hey, Jonathan. Good morning, everybody. Good morning. Good morning. I got a really, really interesting show today. A lot of stuff to show you. And I think, let's start with the first order first. One of the things you're going to notice here is look at my charts. I created a whole bunch of currency charts, the basic majors plus the euro yen cross, the most liquid cross, right? So Canada yen, Swissy, euro pound Aussie Kiwi, and the euro yen cross, right? I put them on a 5-minute chart. Do you guys hear any of that or no? You just hear any like a Nasdaq sell reversal? I always forget whether the sound. I think in webinar you guys don't hear any of my audio, right? My computer audio. So you heard nothing, right? Okay, good. All right, so there'll be no alerts. Here's kind of my thought pattern on all of this. If you think about what is it that we basically do, right? What is it that we basically do with our strategy? We buy closing highs or closing price highs in trend. We sell closing price lows in trend in the simplest possible way. If you were just to remove the arrows, right? If you just sort of to think about this in a way, then our strategy would be, here's trend, right? Downtrend, blue below black. Here's the first lowest low trend candle with the lowest low, right? The next candle that closes below that low, this is the closing low of trend. The first closing low of trend is actually a very legitimate sell trade in our arsenal, right? That's basically the sell trade in our arsenal. Now, the reason why I bring this up is because obviously that expands our trading possibilities from just trading the buy-sell points, the reference points, to just trading the trend, what I call the trend entry structure. But the reason why I have the currencies on the 5-minute chart is because in real life, not in day trading life like we do in our sell session, in our 1-hour day trading session. The proper time frame to trade trend switch, what I call just basically trend switch, is the 5-minute time frame. It's just on a 1-minute time frame in currencies, there's not enough continuity and there's not enough there's too many false signals. But on a 5-minute time frame, you have basically in a 24-hour cycle about maximum about five, most between 3 to 5 trend switch signals, right? And that obviously creates the opportunities for you to find good ideas, especially if you have 6 or 7 of these things working, and especially if those of you who are in Asia, where a lot of the trend structure begins to show itself at the beginning of the European trend. This is obviously, I traded this. This was sort of very easy because this was IFO. IFO created. We had a negative trend. I actually traded this candle on the 5-minute. I think either I was late or this was just sort of the first. It actually looks like this was the second, but it looked like it was the first when I was trading it off the charts of the signals. So regardless, it doesn't matter whether you trade. One of the greatest things, by the way, about this kind of a structure is if you have a fundamental trigger that confirms the bullish or the bearish structure, and then you have this technical confirmation where trend and then the trend is broken on a closing basis, then we have a very, very good opportunity of trading it. Now, the final piece of the puzzle, which I really kind of like a lot, is, remember, this is the perfect way to trade risk percent session tool. Now, risk percent, I leave the risk percent ratio to you. I've sort of settled on a 40% ratio for this particular setup, meaning that I'm willing to. It's high. I'm confident enough that it's high probability enough that I'm willing to take 40% of risk. But the beautiful thing is, risk in this case becomes very, very clear and very dynamic. So risk to me. So let's say I'm entering over here, right on the close over here. Risk to me is the swing high of the prior uptrend. So this is a short example, right? So I would be putting my stop like basically right above here. So if I'm here to here, whatever that is, whatever it is, it's 20 points or 15 points, and I'm doing 40% of risk, then obviously this thing is automatically going to give me 40% of risk of trade. As a matter of fact, while I'm talking to you guys, I just had a trade complete on me in Nasdaq. In this, on the Nas futures, in this particular, sorry, we're really blowing up now. Wow, it's great. Okay, in this particular idea. So here you had trend, right? This is the first candle of trend. This was the candle that beats the trend, so it beats the high. So I'm long on this candle, right? It just beats the high over here. It actually shuffles against me quite a lot over here for a while, right? But my stop was underneath the swing lows of the prior negative trend. So this was the negative trend. I had my stop over here. Whatever the hell this was, it automatically configured the proper TP for me, the take profit. I think it was like 4.5 points against a 11-point risk or something like that, something of that nature. Maybe it was 4.75, whatever it is. The tool automatically configured to me the proper risk reward, and obviously it took a while, but the risk hit. And the beautiful thing about this is that it makes such imminent sense from every angle. And by the way, sorry, I got a signal that Aussie trend is up, right? So here's a chance for us. To put this in practice on a currency basis. So I'm going to put this in here, and the whole idea here is if trend is up, we got to beat the trend. We got 32 seconds to beat the trend and beat the high. I'm going to put ourselves to like 33, 34s. Damn it, I hate this. Okay, so I'm going to put this over here to like a 34. Basically, I think this is the trend candle, or maybe this is the trend candle. So I'll leave it here. Okay, we'll play the game of the high of this candle. Let it beat the high of this candle. If it doesn't beat the high, we'll come in on the next one, right? Now the thing is that once it comes in and makes a trade, then we can adjust our stop to whatever the entry is to the proper stop out. Okay, and that will allow us to create a dynamic risk reward structure that's inherent, that's just basically organic to the trade itself. It doesn't impose a trade structure on the trade, which is kind of very cool, I think, and allows us to to participate. In the meantime, NAS is really ripping here to the upside, right? We're opening range. I'm going to watch this pretty carefully because I want to see just how much of an opening range move this this takes. Actually, let's see. This is good. This is like sort of our non-traditional trade. Well, it's taking, okay, so it took out the highs. Let's put this over here against this high. So this is the opening range highs. If it beats the opening range highs, which it looks like it's doing, we'll give it, yeah, we got to give it a second here. And by the way, you see the Aussie does not complete. The thing about the setup is that it's true to our core tenet, which is that if it doesn't show us momentum, it doesn't enter us into what is a weak trend, weak takeout trend here. Here, I'm just kind of trying to see if I can trade the opening range high. It looks like it's gonna. Let's see if it can hold the highs on this candle, because obviously the market is very, very bullish now, so it really wants to flop. But in this case, it's going to be so volatile that I think I want to just put like a very boom, 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 6. Okay, good. So okay, it's +6 on the NAS on just our usual. Let's trade the breakout opening range high trade. I'll leave it here for now because now we're super extended. I mean, it looks like it just wants to rock, and and it was obvious that it was it was really pushing it, but for now it's so overextended that the volatility, everything else puts us in a very risky. This was as much risk as I was willing to take because it took out the opening range high, and I thought there was going to be at least 5, 6, 7 points of movement. There could be 15 points of movement here given the strength, but we'll leave it alone. But so so those are the two sort of key things that I wanted to show you. Obviously opening range high, trend continuation trade, right? So opening trend continuation trade. That's what I think that's the proper way to describe it. We are trading the opening trend. Is there continuation? If the answer is yes, we trade it. If the answer is no, we don't get clipped into it. Now you can definitely do this on a 1 minute time frame in currencies if you really wanted to. It's just that you're going to get a lot more false signals, and you see trends here are really starting to compress. I'm actually curious to see if Nasdaq is going to go negative trend, right? This should be like at the end of this, it'll probably create a negative trend trade. Let's just make sure we get a session risk trade here. Oops, 40. Yeah, it says to me Kiwi trend down, so I want to trade the low of that Kiwi trend, which is this candle over here. So if it takes out the lotus candle, like if this is not just a fake trend, then great. I want to trade that. And since I already know what my high is over here, it's around, what is this? So this would be 7, 13. Let's just say it'll be like at least a 10 high at least. Now it's going to have to be adjusted because where I'm going to enter, if this does enter, could make a difference. It could be longer than 10, but generally that's sort of like, if this thing breaks the lows, this is the swing high from the prior high slice. If it goes beyond that, I am not going to be trading it, and that's it. Anybody catch the Nasdaq? So Kiwi just turned trend up, right? So, and this is the common malady of very, very tight ranges, right? We don't have any clean, clear move of trend up, trend down. So now obviously I have to cancel this. And generally, when the thing is so flat, when the moving averages are super, super flat, I really, really don't want to be in the trade. But I'm just doing this kind of like just to more for demonstration purposes now, just to see if this works. So I'm going to have to go buy this at the high of the candle, right? Now against this low, which is like a 2 low against the, what, an 11. So let's just say we're going to give ourselves like 14 points of stoppage, and then we'll just see, if it trades back up to the upside. Meantime, look at the Nas is just, and Nas did look like it was going to be a runaway train. It certainly is a runaway train right now. It's just, did anybody take any of this move to the upside? Anybody take those 5 points, 6 points up there with me? Yeah, yeah. The opening range trade in Nasdaq has been a really, really good range. This has really been a good trade. It's good for 5 to 6 points almost always. So really, really worth it. So what I was going to say to you, okay, so we're going to have to. There's nothing on Nasdaq right now because obviously it's a runaway trade. I'm just going to leave it off camera for now. There's nothing in Kiwi. There's nothing in Aussie. They're just putzing around. Pound doesn't really have. Well, okay, so let's say pound has. This is pound negative trend, right? We're going to play this game. We're going to play the game. So we're a little bit late, but it's a very, very tight trend. And we also have a reference point, so we can actually trade both of our ideas on a 5-minute chart. So let's just play this game. We're going to trade the 40% of target, and we're going to set a sell underneath here. Okay, and it's going to be underneath this point over here. Let's just say over here, right? So if cable breaks, then we're really trading against pretty much that. What is that? 92, 96. It's like a 20, yeah, maybe even 22 point kind of a stop. Got to give ourselves, plenty of stop. And we'll see, we'll see if cable kind of comes down and trades lower. Euro, I think, is still very vulnerable. Euro actually continues, to the downside, breaking the. This is just our classic Euro trade on a 5-minute chart, and we should certainly trade that as well. So this I can just come in. I'm going to trade this market. Okay, I'm going to trade this market on the euro this is pretty much, and this is the other cool thing about the risk-reward ratio. Look, if I lift this up, right, a little bit, it will automatically adjust my take profit and stuff. Just like, if you focus on the risk, it'll automatically adjust your reward, properly. So it's kind of really cool, that way. So the other thing I was going to say is where this is really, really valuable. So it's really cool on currencies on the 5 minutes because that's the right metric time frame for the rhythm of the 5 minutes. Okay, so Aussie trend down. Now I have to cancel my. Hang on a second, sorry guys. Aussie got canceled anyway, so it got timed out, so there's no trend. Kiwi looks like it's a trend down also. Okay, I mean, they're just really, really sitting in no man's land. But what I was going to say is both the German, but certainly the Dow. This is where it gets interesting. The Dow, which is very spiky on the 1-minute chart, right? It kind of like, one way or the other. No, it's not the Dow. This is the Dow. Sometimes it's a hit. Sometimes you can hit 5-7 points on a Dow, but you can't. The euro got done, so that's good. So that's another 5 points on the euro here. If you guys traded that with me, but on the Dow, we can trade the 5-minute chart as well. I mean, this is where it gets really. To me, it's a beautiful, beautiful structure for a 5-minute chart. Now, if you're trading, good thing is if futures have tiny little points on the YM. I think it's what is it, $0.50 a point, right? 50 cents a point. So the thing about trading this on a 5-minute chart, your stops are going to be 50, 60, 70 points, but you're also going to be in a position to make 30, 40, 50 points. Like, to me, I was looking at instruments to trade. Nasdaq is beautiful for us trading the 1 minute chart because it is so volatile, and it just, like, when you hit it, it just goes flying. But for the Dow, very often we're right in our direction, wrong in our stop outs, because we're giving ourselves too tight a stop out for the direction that we want. So switching to this idea of the 5 minute chart on the YM or on the Dow, and then doing the opening trend close entry trade really creates, like, look at this. This is the first 5 minute chart. So, you've got to break the low. This one actually just breaks the low. You're trading against here. So if you come in over here, this is 58, and the high here is like 09. So let's say, okay, it's like a 60 point stop, right? 40% target would be, 40% of 60 would be like a 24 target. So you have a chance to make 24 points with a very, very reasonable stop. Never comes in here. But the point is, this is a logical stop. If it comes back out and takes out all those highs, you're on the wrong side of the trade at that point, right? Same over here. You only have like 1 or 2 crosses, perhaps. Perhaps you just have 1 or 2 crosses in Asia and Europe, and then just 1 cross or 2 crosses in North America. But those crosses provide meaningful pippages. And since with CFDs, you guys can always trade for the smallest possible size, it does, you can totally adjust your size to be able, so that a 60 point stop or a 100 point stop isn't going to be the same as in terms of hit to the account. If you trade on like, I guess for dime pips, right? I think you can trade for dime pips on the CFDs, as it would be another one. But you'll have fewer trades, but there'll be more profitable trades on the Dow, in my opinion, and there'll be bigger trades. And so then, if you feel confident, you can obviously then increase size for larger, because you're picking up 30, 40 points on average versus like a 5, 10 point scalp. I find the scalp approach to the Dow very, very scattershot, simply because the other thing that sucks about this is the spreads, right? On the CFDs, we have big spreads on this thing. Now it's a little bit tight because it's New York session, but it's still trading. Well, this is trading 2 spreads, which is pretty good. But still, the point being is that if you're trading on a 60, 70 stop, a 3 spread isn't going to make or break you. But if you're trading on a 5 point target, then it might. So for all these reasons, it really I think is a more attractive approach for the Dow than trading the pure 1 minute chart. The NAS, we can always trade the 1 minute chart, because the NAS is always a really, really nice volatile trade, right? Okay, so anyways, well, I wasn't fast on Euro, Boris, so the Euro worked. The NAS was a little fast, but like, for those people, like Connie follows me all the time, and she nails it. She knows, like, if she sees me trading. Oh, good. I'm glad you took the Euro. Connie kind of like is an expert at picking me up. So what did the pound just triggered. So the pound was kind of a variant of what we're trying to do. Let's see what a pound is at. So the pound was basically against this stop right over here, right? And actually, I guess we could modify our. I gotta drag this down, right? And that's going to see how that automatically tightens the target for us. I'm tighten the stop a little bit to the high point here. Let's see if the pound can come in a little bit, to the downside and trade out. Where is it? 36.80, yeah. But all of this is just sort of a really. All right, Nasdaq has a sell reversal on the trade here. I'm just looking at NAS here. So Ooh, cable. I'm just gonna take the cable, guys. Cable is good. That's another 7, 8 points. So cable was great. Euro was great. Currencies are really. I like the 5-minute chart because yeah, we're not gonna get as many signals, but we have a lot more currencies to run through. So that obviously creates more opportunities for us, to trade. Where am I? I was looking at my. What happened to my? Where's my thing? Oh, here it is. Okay, so Nasdaq is correcting as very much I thought it would, um, which was, I mean, I knew there was more. I just didn't know. This is always the big question. How much more is there on the burst? And there's a lot, but there was a lot, but not not so much. I got no setups on the NAS except to the upside. If this sort of relaxes and they try to make a secondary run back up to the upside, this is no longer a trend opening trade. This now becomes just our standard, continuation trade. NAS is really coming in. Woof! Wow, look at cable. Cable really crushing it too. The risk is just they're selling it off hard, and this is normal because they ranked it up here. They brought it back down. We'll have lots of volatility. We can just leave this up here as a reference point against this. Maybe it will rally big strongly. This now becomes just a straight up. This is fine actually. If I'm coming in over here, where am I wrong? I'm wrong at, this is going to be a 48. I guess, yeah, I would be wrong like somewhere around here. That's a big risk, but all right, it's fine. I was going to say I should probably put the 20 risk on here, but we'll see it. Okay, we'll leave it as is. Anyways, it looks like we're in a consolidation phase. We may actually even be eventually. It'll take at least 2 or 3 candles in negative trend, right? And this is the other thing that's very cool is that you don't really you don't commit to a trade until the technicals confirm that there's a trade to be committed to. There's a trade to be made. So that's it. I just wanted to share this approach because this is a very simplified, very clean, but very philosophically accurate approach to what we try and do. We trade continuation that's confirmed on a closing basis. Trends are, sometimes trends are fake, sometimes trends are tremendously continuous, right? When trends are fake, we generally are able, like for example, this is the first trend candle. The highs don't get taken out. Oh, I know this was. Oh, this is exactly right. So I think this was the first trend candle against which I was trading, right? What am I talking about? Oh, never mind. This is a different trade. This was a. I actually in this trade I got stuffed to the downside because I was trading, before for my own account before the market opened. So this was a downtrend. This was the first trend. Oh, I think this was the first downtrend candle. I sold it. It sold me to bottom. You're gonna get clipped. I should have stopped myself out over here, but what happened was I hedged my trade in the other account because I wanted to give a little bit of breathing room. The other trade, while this lost all this money, the other trade pretty much made money from here all the way up. So I really didn't care. So I hedged almost like 60% of the loss, so it's fine. But if I was doing this in a straight up, directional value, this would have been the loss, which is fine because in this kind of a trend opening range, if you're trading, let's say, the high liquidity hours, like I told you to, the 6 a.m. to 11 a.m. hours, you're basically looking for like 3 out of 4 win. If you're at 3 out of 4 win, you are on a and you're hitting 3 out of 4 wins and you're at a 40% risk to reward basis. You should be doing you should be doing fine. You're net positive. And actually, I was when I was back testing this, it was actually during the high liquidity hours, you were sometimes getting up to 4 out of 5 wins. In other words, the trend had enough continuation to be true most of the time. And when it was false, it didn't put you into a trade because the trend, like in this case, the breakout trend here just never materialized. So you didn't take the trade. Let me take this off. Let's look at CFDs for a second. I was gonna play this just for fun, which is like take the Dow to the low side. This is the 5-minute candle. Obviously, this is a very, very large risk trade, but it's one that makes organic sense. Like it's making fresh lows, right? This is the point where you're wrong. This is the point where you're wrong. So you have to give yourself like a massive amount of room here. This isn't basically, I think about 100, no, maybe even 200 points worth of room. So it's obviously a much smaller position. But if you're right, there could be another 100 points, to the downside of this move. I actually think we could get very negative. I'm waiting for Nasdaq to turn negative on the 1-minute chart, and see if that materializes. I have like 5 periods. I have 5 minutes on this. Let me bring this over to you guys. I have 5 minutes on this thing remaining, so we'll see. And maybe we'll have a burst up, but it looks like opening range burst kind of died, and now we're going to be taking profits. Remember, there's a couple of things that makes me think that the bearishness could be the right trade right now. All the gains happen in Asia and Europe. Usually when that happens, America loves to reverse the gains, right? Because the dealers are coming into the desks right now having been like massively net short because they had to print all those longs overnight to everybody. So they want to collect some of the some of the shorts that they've made. And unless there is a huge secondary flow of retail and institutional coming at them, they're going to try and do their best to bring the Nasdaq back below the 13,500 level, right? Then once they kind of consolidate that move, they'll see if anybody wants to pre-position for the earnings moves, which by the way don't really hit the market till tomorrow. And then on the earnings story, the big story that everybody's going to be watching on the earnings is there a truly strong continuation on revenue? If that's the case, we go, they're going to push it to fresh highs. And if revenue growth, not even profit growth, but just revenue growth slows, I think you'll see multi-day corrective phase because the market is so gung-ho on the work from home stocks just doing so well, right? And now it's it's unable to do that. I actually if I was really true to my setup, this is the reversal trade move. I'm sort of very late. This is already a late candle, right? So I got to cancel this. This is not a legitimate trade for us because I just realized this. We always want to update our settings, and if I was really going to trade the trend continuation move, I should have traded this move over here, against the stop over here, and I would have actually gotten stopped out on the volatility, which is why I really didn't want to do this right now. And if you're going to go back to it, then you have to trade this breakout move over here. So I was late to entry on this candle. This candle over here would be the proper trade because we've had lots of reference points since that point that we always want to update ourselves to reference points in terms of entering. So this trade, if you came in here at 42, you would have had a reasonable chance here to to have a P&L. But my view is that we're really trading against the tops here. We'll look kind of exhausted, and it's much more intelligent I noticed that during this particular time, the opening range time, is not to worry so much about the reference points as is to worry about the session high, session lows. Like the first 60 minutes of the market is all about beating the session highs and session lows, right? So if that's true, then we really should be trading against this point here or this point here to the downside. And we can do that. We can definitely do that. And let's see if one or the other works out. So I'm actually let's just try to trade to the downside of this point here, just to see if the idea being is that the buyers took it higher, sellers did a first corrective move. They got the corrective move stalled. If there's more selling flows, if they really want to break the lows, because the whole point is once they can break these lows over here, everybody who still thinks that there's more continuity to the upside is going to say, oh, they're bringing it right back to the opening range. They're going to start bailing out. That's exactly what they like to do. We don't have any funded news today. It's all in anticipation of fundamental news this week. And I think I could be wrong, and it's obviously that's why I'm going to look at the news. But the market, unless the revenue rates are just so mind-numbingly great, it's going to be hard for me to see how the market isn't going to sell off on sell the news dynamic this week. So I'm, cautiously, I'm just tilting negative if I have the technical confirmation to it. Where are we now? It's 10 o'clock, first half hour. All right, so let's hang for another like 10, 15 minutes just to see how they play the opening range numbers right now. As far as everything else goes, nothing much. Everything is very compressed. I don't know why this didn't. They should have communicated to me that the yen broke out. Well, that was interesting. All right, so this is kind of interesting. So let's. This is part of our trend breakout. Opening trend breakout structure, right? So let's put this up here. We want to trade against the high of this candle. And this would be. It's an entry at around 92s. It's interesting, huh? Dollar kind of strengthening to the 92s. News, by the way, terrible news out of Europe. I think Euro is going to be under a lot of trouble all across the board now, unless they can get a grip on the pandemic, because it's really starting to just impact their. And I think you see the dollar reversing its sell-off mode. Dollar Swiss should also be. Well, dollar Swiss broke out much earlier. As you can see here, if we use the dollar Swiss strategy, we would be in trade. This is the high over here is 88.74, right? 74. What was the close here? 88.75. It would be high. It would be in on this trade, right? Stop would be underneath this low here, maybe about 18, 19 points, and you can see how easily it would have taken us into a trade. You just, the trend entry trades are, I think, are really, really good, especially if you have, the beauty of it is trend entry trades with a fundamental kicker behind them really gives you higher probability conditions. Nasdaq starting to fall. Where was my other Nasdaq? I'm still far away. Okay. So Nas is still, battling here, trying to figure out which way it wants to go. But a couple more candles that start to break down, then I think it makes sense that we made the highs for the session for now, and we seek some profit taking moves here. So we'll see. Yeah. So reversals. And it's not like the buyers are giving up. They're really dry. It seems to be this 13,550 level is a real key battleground. It's like I was saying, that actually completely dovetails with session highs. So if they close through session highs, the whole focus turns to the upside, not to the downside, right? It becomes an upside trade, not a downside trade. But I'm actually let's kind of have fun with it on the CFD side. We can set the upside trade. All right. So on the CFD side, off the upside, if they really want to take this higher, they'll take out the upsides on this move. So I won't have any futures trades, but I may have a CFD trade here. I'm willing to have the market surprise me, but as I said, my bias is negative, but it doesn't matter what my bias is. I'm open to however the market trades, because where the market trades, I'm going to have the highest probability of entry. Anybody have any questions, by the way, about opening trend trade? Is it pretty clear? What I'm doing. I'm looking for trend up or trend down. Oh, I totally forgot. I actually created all the audibles for you, and they're all here. While we look, so if you guys go into the BK tools and you go into the Arrow Trader, right? There's trend only templates for every one of these guys, every one of all the majors, and trend only sounds, which is this only tells you trend up, trend down. That's all you want to do. You're not gonna have like a million different triggers. So if you have the Arrow, you have to have the Arrow Trader, not the Arrow Trader Plus, but the Arrow Trader on your you should have both of them on your indicator folder. All you got to do is just drop the sounds into your sound files and put the templates on, and you can just configure them. And obviously you can configure them on a 1-minute chart, 5-minute chart, whatever. Let me know. This is all MT4. Don't ask me for MT5. It's all MT4. I'll make 5s later, but for now everything is going to be F4. For everybody who's on everybody who's in the US is trading 4s on Forex anyways. So Forex is always going to be 4 until until everybody moves to 5. Okay, so it's if you're trading Forex, even if in the US, you can certainly trade it on 4. Either way. So I made all that stuff. You can look it up for yourself. So Nas is just twiddling thumbs right now, doing nothing. Just curious actually to see where's our cable. Cable had so the big move down. That was a nice big move that we caught. Euro also. So what I was going to say is I'm very negative Euro now, because the fundamental news, if you guys read my point, is not only is the economy bad, but the efficiency of the vaccine distribution is terrible. Now, what's going to happen? So what happens if you have that sort of a deadly combo is it's a perfect mix for populist politics. Marie Le Pen is probably running pretty close to Macron at this point. If, as a result of the screw-ups of COVID prevention, they're going to get more populist governments in Europe, you can kiss the Euro experiment goodbye. It becomes Trump 2, but now in the Eurozone. And that is, I think, something very few people even thinking about, but that is an imminent danger. Euro, to me, so from a longer point of view, Euro takes out 120 to the downside. That's the market starting to freak out about the populist rise of the Euro due to the screw-ups of COVID. So it's going to be very, very important for the next month for them to really roll out the vaccination campaign, because it's not even about getting people it's obviously about getting people healthy, but it's much more about getting the economy back up and rolling, because for all intents and purposes, retail is dead in Europe. Nobody's shopping because because of the global lockdowns that's going on. So that's the macro picture in a nutshell, and it's nowhere near as benign as the price action suggests, which is why I'm just telling you guys to watch the euro, watch the news, and if the price action starts to break to the downside, those are the trades you want to be taking. Okay. Yeah, Krasi's saying Italy is risk now in the EU. Yeah, they're all risks. I mean, my point is, before it used to be just crazy Italy, or before maybe it was crazy Greece, it was just Southern Europe. Before it was maybe Spain, and we'll just pump a few more dollars into it. But now they need to coordinate and cooperate and implement. The most important thing is they cannot fuck around, So to put that in very scientific terms, and that I think is a risk that few people are appreciating at this point, So, anyways, okay, we got nothing, guys. So 6 or 7, I think 6 in the pound, 5 in the euro, 5 in Nasdaq, which only Connie followed me with, but that's okay. So not a bad day, not a bad Monday. Very, very clean, right? The whole point is all super clean, super straight up things, and that's what I really want to start doing now. There's this whole big chapter that Schrager had this weekend about there are 4 types of trades. There's the winning trade, the losing trade, the good trade, and the bad trade. And I think we've been doing a lot of bad winning trades. Like we've been winning trades on bad entries. And I'd much rather be doing, I certainly want to be doing good winning trades. But if nothing else, I'd rather be doing good losing trades, because in the long run, doing good trades, which is trades that are just setting up, no chase trades, no high vol trades where we're overextended, no improper risk control trades, all those things. In the long run is what creates consistency. We've been very, very good. We've been doing a lot less bad trades than when we first started, certainly. But I want to eliminate the bad trades down to 1 out of 20. And now I think we're probably 1 out of 5 if we're going to be very honest with ourselves. Today, I think we did all 3 correct trades, so that's actually quite good. And I want everybody to absorb that as you guys go off into your own trading. Okay. Any final questions? You guys want to hit me with any final questions? Anything else on your mind today? Anybody who's new here wants to ask me anything? But the core of what I wanted to show you is that, it looks like NAS might be starting. It hasn't quite yet turned negative, but as usual, when I go off camera, when we're out of camera, right? So here's NAS to the downside, right? We're gonna, damn it, I can't get a grip on my thing. I want to set this up. It's not quite negative trend yet. It's just about turn negative trend, right? And we should be trading the session low. So I'm going to trade against this, but I'm going to set this up against 11s. It's really coming in against this low here. So if we break this low, I'm kind of trading the session low here. It's fine. Against this swing high. So this is actually a big move. It's a really, really big risk. So you have to, again, if you're trading CFDs, you got to trade small. If you're trading futures, you got to be prepared to trade a much bigger risk here on this thing, because it's a what is that? That's a 50. And you're entering 11. It's like a 40-point risk. So it's a big risk. But you hopefully going to get a bigger entry reward. All right, guys. Or you can just kind of trade tighter risk against this first high, which would be 36, which would be like a 20-point risk, which I think would be reasonable. Like I think if it comes back up above here, that negative trend is not viable. It's not real. Okay, so everybody have a great day. I don't see any questions, right? Everybody's good. Yeah, so Nasdaq trend just sent a trend signal. Enjoy the audibles. Let me know if you have any issues or problems with them. Everybody have a great day. I'll see you guys later. Take care.